Last panel for today, Game of Thrones means the big guys, sozusagen, the VCs with the big checks. And I'm really happy to have Tanja Kufner as a moderator on my side. Come on, join me. Tanja is partner at MHP Accelerator, a Porsche company, and founder of Dynamics VC.
Yeah.
What is Dynamics VC?
That is a good question. We are currently experimenting with a model. We are building a small venture fund called Dynamics. And we are also building various startup and corporate engagement models because we've learned a lot of interesting lessons from the past, having run Accelerator, Startup Bootcamp, having run Wyra, what it's like for a single corporate accelerator. And we have a new investment thesis that we think it makes sense for a company that is very deep in technology and understands IT systems and tech, to actually the value proposition being we can actually help startups really integrate into the IT systems of our clients, because that's the whole reason why many corporates and startups don't work. So my value proposition is the company called MHP, which is the biggest IT systems integrator in Europe for automotive manufacturing, et cetera, et cetera. And so that's what we're going to be building upon.
Means you help startups to get digital intro in the legacy systems.
Exactly.
And you give a little bit of money.
That's right. It's more like enterprise focused.
That's cool.
Yeah.
Good. That's your panel.
Right.
The panelists are there. They are prepared.
We have almost as many audience members as panelists. So first and foremost, I would love to introduce Tanja Emmerling on the stage. Tanja, if you don't know, she is a senior investment professional with the High-Tech Gründerfonds, HTGF. Nice to see you.
Nice to see you.
Have a seat. Next, another wonderful female. I'm happy that we have a bunch of women here. This is lovely. Chitra Sommer. Chiara used to be with High-Tech Gründerfonds, HTGF, and I'm so proud of her because she just joined Intel Capital, which is amazing, fantastic. Next, I would love to invite Dominic from e.ventures, Dominic Wilhelm. Please come on up. Nice to see you. And last but not least, we've got Jens Düing from Frog Capital, who is here from London today. So fantastic. Great to see you. Thank you. All right, Game of Thrones. So before we start, I think it would be lovely if you all introduced yourselves, what you've done in the past, and what your fund's investment thesis is, or whatever you want to tell us about that. So maybe we start, if it's okay, with Chiara.
Sure. So I'm Chiara. I started as a founder and then switched to the dark side more than 4 years ago. Joined High-Tech Gründerfonds, the most active seed investor in Germany. But Tanja will talk more about that, I guess. And I've done like 10 seed investments there, including Asana Rebel, Unique, and Bitwala. And actually now I'm probably, it's the right term is to be unemployed, but my new job is going to start on Monday with Intel Capital. So the chip company Intel has a corporate venture capital arm investing worldwide and wants to focus more on Germany now. And is interested in the more deep tech space in a later stage, primarily artificial intelligence, AR, VR, mobility, IoT, semiconductor. Yeah, I think that's it. But opportunistically also in other spaces.
Wonderful. Tanja?
Hello, I'm Tanja. I work with High-Tech Gründerfonds. I'm an investment manager since 2014. Before I worked in a publishing house doing new ventures in the corporate VC. And now since 2014 with High-Tech Gründerfonds. We are the most active investor in the seed phases in Europe. We invest in anything tech, from life sciences to hardware to the software space, generally over all verticals. And our since 2005, we made over 490 investments, over 1,200 follow-on rounds. So pretty active, have a large portfolio of 280 companies right now. And yeah, very excited to see more.
Fantastic.
Hi everybody, my name is Jens Düing. I'm a partner at Frog Capital, the London-based scale-up investor. We focus on software companies across Europe. I'm responsible for our continental European business. And these are companies that are usually a little bit further developed already and basically need more fuel to grow faster and further. Our investments in Germany are MacMakler, which is a leader in the online hybrid real estate agents, and Sofa Tutor, the dominant player in online tutoring. So we have a slightly different strategy to the other panelists here in that we have a more concentrated portfolio, but obviously by the stage that we invest in, we benefit from the fact that companies are further developed and hence have less risk involved. And yeah, it's a good time for us. We obviously look for more.
Mm-hmm. And Dominic?
Yeah, I'm Dominic, part of e.ventures. Joined e.ventures roughly almost a year ago. Before that, helped building a startup in the real estate space, a marketplace for real estate agents, and then also switched sides, I would say, to the gray side, maybe. e.ventures is a global VC firm coming from San Francisco originally, so 20 years old this year. Today, 5 offices, one in Europe here in Berlin, covering this market, then one in San Francisco for the US market, 2 in Asia and 1 in Brazil. We have decentralized early stage funds that do investments from 3 to 5 million per ticket and round, and then also one global growth fund that does sizes of 10 to 25 million per ticket and round. Originally, I think in Europe, focused on more B2C businesses, so consumer internet and software, but are happy to look at everything, you know, internet and software related and scalable without being bound to geographies.
Very, very cool. I want to start with more of the European view on things before we dive into Germany and Berlin and so on and so forth. What I found interesting is that in 2017, we broke all records in terms of numbers, and apparently 19.4 billion was invested in venture capital, which is 36% more than the year before, which for me as a wannabe founder, or actually I have 2 sons, they're both founders, looking constantly to raise money, that's such a great signal in the market, right? It's become easier and easier for startups to raise money. There's more money in the market for tech. So 19 rounds, over 100 million. So how do you feel, is Europe slowly catching up for the attention of not just bigger funds like coming from Asia and the US, but also in Europe the ecosystem is growing, not just Berlin. I'd love to get your take on that.
Yeah, so catching up with the US, definitely. The question is whether we'll ever reach the same level. But what we're also seeing is with the larger rounds is that companies are staying private for longer. And this has always been a challenge in Europe to get capital beyond the capital markets once you've reached a certain stage. So the challenge in Europe has been in the past that you had to turn business profitable earlier than in the US, which then of course has an impact at the speed of growth that you have. So the movement is definitely to catching up, though I'll challenge that we'll ever get to the same availability of capital that you have, for instance, Silicon Valley.
Right. Dominic, you see a lot of deal flow coming from the you have a great sort of experience looking at San Francisco and then looking at Europe. How would you compare sort of the deals? Like we were talking on the phone and you had some interesting insights.
I think there's still a big difference in terms of, you know, exit valuations and also round sizes. So rounds in the US are still way bigger than in Europe. So a usual Series A round would be roughly, it could be, you know, in the 10 million range, and that would be normal. And in Europe, that would be considered, you know, a big A round for that stage of company. But we see more and more that, you know, US VCs and especially either VCs focusing on specific like segments, for example, blockchain or cryptocurrencies coming to Europe and looking at Berlin or London or Zug and other hubs in that segment. And secondly, we see many, you know, growth stage investors from overseas actually looking into Europe. And that could be, you know, from the US and that could be from Asia, because I think, you know, in the range post-Series B, so we have many great seed investors, we have many great Series A investors and also post-Series A, Series B, but when it goes a little bit further than that, I think we still have some room to grow. And I think, you know, big US VCs see some first exits like Spotify and see that it's possible to grow really big companies in Europe. And that's why they more and more tap into the later rounds also here.
Yeah. apparently investments from the Asia tripled. They did 138 rounds, and then you've got 440 deals made from the US. I think Asia probably is that SoftBank Vision Fund, right? It's a very different style of a CVC, but since we've got you from Intel, I think a lot of CVCs are doing deals this last year, a lot more than I think in the past. I think over 38% of all the deals made were done by corporates. How do you see that in the market? So is that a good thing, that corporates are taking over?
Yeah, well, Intel, for example, is a corporate VC, but they've been doing this for more than 3 decades, and they are the most active CVC. So I don't think that every CVC is like Intel, and I think it's a question of how the corporate is acting in the VC space. So if it's a real financial investor that is also not just trying to enter on a good deal at a bargain, but actually acting like every other financial VC, then it's a good thing. But I think a lot of the newcomers in the corporate venture capital space, they might have a very, very strategic angle and could harm potentially as an investor, especially if the startup is in a very early stage, that they're just navigating strategically towards the right direction of this corporate and not developing freely and having this single interest of the company, but also of this corporate. So I think as a startup, you have to think about with which CVC to partner and what's their track record. And for all the other new CVCs coming into the market, I think there are a few to learn from, like Google, Intel, and so on, how it's been done right. But I think a lot of German corporates and actually German Mittelstand has still some problems to figure out their role in this whole area.
I totally agree. I'm in the middle of that too right now. We've got so many corporates that think it's super cool if they invest very early and then take 20% on the cap table of a startup, and it's like you're killing it. That's never going to get financed, right? Yeah. But anyway. Tanja, you've done HTGF for a long time. You've also got a pretty big portfolio. I know you guys are always at Hightech Gründerfonds. You manage so many portfolios and investments. It's extraordinary. I think you have how many?
I have 12 in my portfolio
12,
right now, so
yeah.
I mean 14. So.
And I think most of you guys is somewhere 14. Or where's Kappa?
Yeah,
right?
12 to 15. Yeah, it's massive work to do, but it was a lot of fun.
Yeah,
so you see a lot of going on.
What are some of the trends that you're seeing? What are some of your favorite? Hightech Gründerfonds looks at so many different verticals, right? You basically support almost anything if it doesn't drift.
Yeah, we look into tech. But we have the 3 large pillars: life sciences. That we do everything from medtech to drug development. We have really the hardware stuff that's really rare to do in venture capital, and then we have the software space. Where we do pretty all verticals. So we're trying to look in a broad view. We make a lot in SaaS models and application software, automation, but also we are looking in the trends in the market like AI, blockchain, IT security, IoT. So where everybody's looking, also we have an eye on it. Certainly.
Yeah, it's been really wonderful to have the Hightech Gründerfonds, right? It's a part public, part private.
It's public-private partnership, though. Yeah. With the last fund we launched 2017, we are qualified as neutral, let's say. So we have enough private money in the fund, so we're not publicly. So that gives us the freedom to invest in any kind of equity structure that we want to.
Which has been so good for the German ecosystem, right? To have the Hightech Gründerfonds, because now more companies are getting financed. That seed crunch is not necessarily as bad. I don't think we have a seed crunch. What I find fascinating is that we finally are getting an ecosystem of successful entrepreneurs that have made their exits, and what do? They give back into the system, right? Which is why Tel Aviv or Silicon Valley or all these other cities are hyped.
Exactly, because like 2005 when we started, no one wanted to go in venture capital, so that was really down the market. No one wanted to take the risk. And if you see, have seen what we have catched up in Europe in that space, and how great now the companies developed. You have very experienced entrepreneurs right now. So also the venture scene has grown, and as you said, like internationally, Europe is spotted now as a place where you can invest. That has improved a lot. So so it's very great to see.
I want to ask you guys what you think about this. When I was preparing for the panel, it was the day that Macron announced that he's doing even more. The government's going to get even more involved regarding an AI initiative. I think they want to throw hundreds of millions of dollars into the market. What do you guys think about governments getting involved by sort of pumping the ecosystem? And I think with one of you guys, it might have maybe Thomas, who's not here today, we were talking about how some of that stuff is just creating way overvalued companies, or it floods the market with so much money that every startup gets funded. But anyway, I just want to get your thoughts on that.
It depends a little bit on what form that money makes its way into the market, right? So if you think about the government initiatives around Europe, you have some money that goes in people like us, and the idea there is that people like us have the market expertise to develop and to value the companies appropriately. There have been other initiatives where funds have been set up by government money, thinking of the Business Growth Fund in the UK, for instance, which is just basically falling apart at the moment because of politics. So it's a question how that all plays out. And then you have the entire subsidy system, and then you have, for instance, also good investors like e.b. Beteiligung here in Berlin. So it's a question how it comes in. I think the fact that the money is being pumped into the system and allows more founders to get off the ground is per se a good thing. Yeah, the question is just to get the right expertise in with that money.
Was it you, Dominic, who was talking about France? Yeah, right? Yeah, let's talk about that.
Yeah, I mean, I think it's always very important to give young founders with great ideas the possibility to get funding and do stuff in that space. And I think Germany can still do a bit more, but I mean, you guys are more able to judge on the current situation than I am. But if you look at certain markets, for example, France, you have, or we get the impression as Series A investor that there's almost too much money in the market. So, I mean, when we invest in Series A companies, we want to be very metric driven and see a certain, traction, revenue, whatever we look at. And we see that for France, it's the case that companies just don't have the traction and don't even need or want to have the traction because they say, oh, we can, fund our seed round anyhow, we can fund our Series A round anyhow with French VCs and French initiatives, just because there's so much grants, there's so much angel syndicates, there's so many funds. There are actually, French funds that don't want to look within France, but rather Western Europe, because they see that companies value themselves in the seed rounds because they get 5 million, they value themselves at 20 pre, which is like without any traction, and that's not a basis where we would or where we can invest, with good conscience. So I think it's important that companies or young founders, ambitious founders get means to get funding, but I think at a certain point you have to stop. So I think it's...
Well, it just is going to delay to death, right? Because then what, you're going to not close a Series B round that you need, or when do you find out that there's no product market fit? How does that work?
I don't know the French market that well, but I think two things are very important to mention here at this point, and why this government support is so important. We are now in a phase where the economy is great and money in general is cheap, but this is not always the case. We've had downturns, and the venture capital industry and everything that has to do with innovation is the first thing that will be cut down once the economy is lowering. And this is the point where the government support is super important, because just because the economy is going down, you still need money to invest against the cycle in this important phase. And even great ecosystems like the Valley very much rely on public subsidies. So big companies like Tesla and SpaceX and so on, they all have grants.
I didn't know that.
Yeah. the VCs don't need so much government support because the system to raise money in the US is a lot easier because you have like insurance companies and university down payments that can invest into VCs, and this is lacking in the European system. So you need other sources of capital, like the European Investment Fund and private investors to gap this hole that there is between the US. So I think more government support is very good, but as you pointed out correctly, it depends like the way to structure it. I think with Hightech Gründerfonds, with Coparion, and with EIF, actually 3 great initiatives have been done, and you can see also the fruits out of that the ecosystem is developing because of that. And I think it's a major part that because of the government.
You're in London, right? So you see the so if I look at the numbers, UK still did okay in terms of some things, but Brexit is an issue. It's an issue for funds like yourselves. You know, people have IFE money. Lots of friends of mine have had to leave the UK to move their funds to France. How do you think that will impact the venture market in the next 5 years?
There are 2 main aspects. The first one you were alluding to is how it impacts funds like ours. And the main challenge right now is that the European Investment Fund doesn't know what the regime will be in 2 years' time. So if you ask them the right questions, you get no answer. That's a challenge, right? So some funds reply to that by actually moving out of the UK. And then there's the question, what do you have to do? Do you have to put the legal structure somewhere in Europe? Do you have to put the team in Europe? And all of that, again, the European Investment Fund gives you no answer. So it's a preemptive thought right now. Will it impact our industry? So 80% of the VCs in London have got money from the European Investment Fund. So without a shadow of a doubt, it will impact us. And the question, however, remains to be seen how deeply. But one place where we can already see it is actually in the talent. The European talent doesn't move to London anymore to the same extent it used to. And we have a few companies in London, as you might guess. We have them across Europe as well. The hiring of developers has become much harder over the last year or so. So you can already see that the UK will definitely suffer a dearth of talent, because a lot of Europeans are no longer coming to London. They're coming to other places, and particularly in Berlin.
Which I love, and that's going to be our next topic, yeah.
And that's going to be an effect it's not going to be a one-off effect, right? That's going to be there for a long time to come. Think about university tuition, for instance. So right now, if you move to the United Kingdom, you're treated like a European citizen, the same as the British for tuition fees. So you pay no more than a maximum of 9,000 euros or pounds per year. Going forward, you will be an overseas student, and you will pay for the same privilege 30,000 pounds.
Right.
Lots of people won't come.
Right.
And a friend of mine is at a London-based university doing a PhD there. At that university, they have an 80% reduction of applications from the European Union.
Wow.
So you can see that this will have a huge impact on the talent pool in the UK.
Which is good for us in Berlin. I've only been here for 4 years, but I think it's actually so exciting to be here. And now, you know, it took HTGF a little bit. I remember before you guys finally got an office, I remember people
It was a long
coming
time.
in and out, right?
Still coming in and out, but we're happy to have an office finally.
Yeah.
Before we had Chiara, we had Satellite, but now we have an office.
Exactly.
So we made a step forward, definitely.
What do you guys think about Berlin? So is Berlin past its e-commerce bubble? Are we getting interesting tech? Are we growing up?
I think it has still a lot of undiscovered spaces where interesting models to find. But about Berlin, it's like the place to be, especially for international investors. As you said, there's a lot of international capital coming into Europe, and they go to Europe. What's the first place to go? It's Berlin, definitely. So network-wise, it is the most interesting place, I think, definitely. And it makes part of the system. The ways are shorter, the contact is shorter if they're part of the ecosystem.
And Chiara, why for you guys, why Berlin and not Munich or?
I did do the decision. I did make the decision, but I understand it. It's a bit what Tanja said, that you really have like an ecosystem here, whereas in Munich you might have great companies, and also Karlsruhe and Aachen and so many other places in Germany, but they are lacking this ecosystem. And this gives like great value as a startup hub in general for Germany, that here the investors meet, and also more and more good companies are here, especially if you look in spaces like crypto blockchain, where Berlin is like the hub worldwide. There will be more industries, hopefully, where this is the case. On the other hand, if you are a B2B tech company, the companies that you are selling to in Germany, they don't sit in Berlin or in the northern part of Germany, let's be honest. So I think there's still like lots of good companies to be found in other areas. But the communication hub is, I think, continues to be Berlin.
Dominic, you and I were talking on the phone, and we, you had an interesting point. So a lot of the really interesting data scientists and PhDs and spin-outs in AI and interesting tech that comes out of universities, you really like the UK market for that, right? You see more interesting tech still coming out of the UK and the universities there than necessarily in Germany and other places.
Yeah. To be honest, I don't 100% know why that is, or why I have the feeling that is. I just, I think the UK is very dense, relating it to the, number of very good universities in that space. So you have Cambridge, Oxford, UCL, and a couple of others, and they've been, I think, been in the field of, AI for a couple of years now, and they've actually started, pushing out initiatives, etc., a bit earlier than Germany has, for example. And I think, really good universities in Germany are also existent, but they're a bit further away. So a bit different ecosystems, I would say. If you go to Aachen or to TU Munich or TU Berlin, it's just different places and not so close to connect to each other. And also, I think that the VCs in London have more of a focus also on those kind of topics, right? So I think I completely agree. I think Berlin, for example, for cryptocurrencies is great, but that is also because those crypto people didn't need any VC money to emerge and work on their stuff and build a great ecosystem for themselves. Within AI, especially coming out of research, at some point you need external money, and you need to be able to sell a product and build a product beforehand with money. So I think the UK is a great market for that, and Germany still has some work to do, but is on the right track.
Let me try to figure out where we go ticket size wise. So we would probably, if we need up to, 600 or 700,000, I would go to Tanja. If you're a founder that's looking to raise it.
Yeah, we start initial in seed investment 600 to 1 million in first round, and we can invest up to 3 million in a company. Okay.
Then the question is, who would be next after that? Like, what's the smallest round? You say you need your companies to do between 3 and 5 million minimum in revenue, right?
Yeah.
So you're not going to get that after you've been to Tanja, to HTGF. So who would be next in line? Maybe you guys?
I don't know about Intel exactly.
No, Intel is super big.
So
tickets,
the answer for Intel is more or less unlimited pockets as long as it fits. So it can be seed, but it can be also very
Really?
late.
Oh, that's beautiful. Okay.
But in general, a bit later. So somewhere where Frog invests as well.
And you guys?
Yeah, I guess so we would be next in line then. So late seed rounds in some cases, but mostly Series A, almost late Series A stages. So tickets between 2 to 5 million in dollars. Yeah.
Cool. I'm going to keep going because I don't see anybody here. So I don't know if you guys are interested. Da bist du. Do we still have a little bit of time? Yeah? So my question is, what is for you? Can each of you give us tips? What does a founder need to do? Not just to approach you, but what is your favorite sort of trait when startups approach you and you look at them a second time and a third time? Like, what are you looking for? What's the secret sauce? I know that's really hard to answer, but
No, we can try. So by the time that we get to see a startup, it's basically no longer a startup, it's a scale-up. So Darwin has done some brutal work beforehand, and by the time companies come to us, the companies have a product market fit. So we look for that, we can see that. Then the next biggest element for success is the team. Yeah, and for the stage that we are at, you will have a challenge that the challenges that you face will become broader, more complex. The teams have to expand. And the biggest challenge, or one of the biggest downfalls, is that teams hire people they like. So they hire in their own liking, and that way you actually create a few black spots and blind spots. So the secret sauce there is indeed self-awareness and a willingness to understand how that challenge set is evolving. So in our case, for instance, we work with a team development partner who's a trained psychologist. And his view is, and his job is primarily to actually help the teams understand how do you make your decisions and where are gaps in your skill set. So that when you start hiring for functional heads as you go forward, you not only hire for the CV, but you also hire for the culture that has enough overlap with what you have already, but also brings enough new elements in that actually helps you improve the chance of further success.
I remember when I was doing ticket sizes around that time, most of the board meetings with all the other investors was around the discussion of letting the CEO go, the original founder, right? Because when you get to that scale up, I hated that. People were always arguing, but there comes a time, and I love your approach that you're going to try to coach them and help them. But there is a very different skill set that a founder in a scale-up startup has than, and very few, I don't know, can make the whole process. It's a rarity, but yeah, how about, what's your thinking?
Absolutely, we see that too, but we also see in strong teams that they are very proactively thinking that way. They know they're at a very certain level, and then they themselves want to have the best people on board, and they proactively say, oh, now we need someone with super industry experience and those connections, and they go for it. So whereas others just can't let go out of being the founder and the face of the company, and then it's getting difficult. So if the company faces problems. So when I look at the team, then it's very important for me that the person can drive the company forward, and I have an impression how they act if it's not going well. So can they pivot? Can they bring forward new ideas? Can they change? Do they accept external other team members on the board? Or so that's very important, I think.
Anybody else? Any takes on that?
I think from how to approach an investor, my favorite thing is if they approach, like a new company would approach me through a portfolio company or a founder that I've worked with in the past, because I think like I've trusted this founder that I invested in once, so if he makes an intro to someone else, it's a higher trust level. And once, like in the due diligence or also working together, I think for me the most important part is trust and how to build this trust. Because, and in the due diligence process, mostly like about, have I delivered on promises that I have made in the past? And you're gaining my trust through that. But I also have to gain the trust from the founder on my hand. Am I delivering in the process? Because I think a lot of this business is highly people's business, and this is why trust and building this relationship from the first day you meet to your Series C and exit is so important, and that you have a trustable relationship.
So are there certain tricks that you put into the sort of due diligence phase where you can then test that, right? Is there a process behind it, or is it more just the time that you spend with founders?
I don't have a standard trick or formula. If I would have it, it would be stupid to tell it here.
Well, we always prepare the startups after an accelerator program how to approach a VC, and we always say, listen, don't send all the data, send it in pockets. Because Chiara's going to come back to you tomorrow and say, where's this? And then you've got it ready. And do you know what I mean? Maybe some startups just aren't ready. They'll send you some stuff, but then you want to dig deeper and they haven't prepared their documents or whatever. But how much, so I love that you were mentioning that you needed to come through a referral. How do you guys work? Is it, how much of your deal flow is inbound, and how important is it for a founder to actually ask for a proper intro from someone else?
I think it totally depends on, you know, what kind of market you look at. So if I only chose southern Germany for my deal flow, I would become probably, or I could become quite known there in a year's time, just because I spend a lot of time there, etc. So if I look at whole Europe as my market, I think it's pretty difficult to get all the good deals via personal network, but you have to do a lot of reach out. Especially in the Series A stage, with companies that have a lot of traction, have good growth rates, and other VCs see that actively as well. Because most of the time, Series A, like, you get a lot of inbound requests from the companies that you don't end up investing in. And the companies you actually want to invest in, you don't see, because they're so fast off the market, because seed investors double down or other VCs are simply faster, that it's really problematic. So I think best case would be to get every good quality deal through inbound through personal network. But the reality, I would say, you still have to do a lot of outbound research as well. Yeah.
You guys are very data-driven in your approach anyway, I think, isn't it?
Yeah,
You're
partly.
Very,
yeah.
Okay. Wollen wir Fragen aus dem Publikum aufnehmen? Ich weiß nicht. I thought maybe spend the last 1-2 minutes seeing if anybody has a question from the audience. No? Do you guys just want to meet the VCs? So I don't know how this works, but I don't know if you guys want to spend maybe 5 or 10 more minutes here in case anybody's in the audience that wants to have a chat with you. I think our time's up. And I would like to say thank you to all of you. I wish you all a wonderful weekend. It's been lovely chatting with you, and see you soon.
Thank you so much.
Thank you.